What if one of India's most important financial institutions finally becomes a publicly traded company? Yes, I'm talking about the National Stock Exchange, NSE. After years of anticipation, the NSE IPO is moving closer to reality. But here is the big question. What could happen to NSE shares after the IPO? Could NSE deliver a strong listing gain? Could the stock fall after listing? And if you are considering buying NSE shares, should you invest before the IPO or wait for the listing? In this video, we'll break down the NSE IPO, the possible scenarios after listing, the major risks, and the 5 things every investor should watch. Let's start with what we know. NSE filed its Draft Red Herring Prospectus, or DRHP, with SEBI in June 2026. The proposed IPO involves up to approximately 14.89 crore equity shares. An important point is that the proposed issue is primarily an offer for sale, or OFS. In an OFS, existing shareholders sell their shares to public investors. The company itself does not receive the money from those shares. The proposed IPO has been widely reported at around the 30,000 crore level. However, investors should remember that the final price band, issue dates, and final structure will be known only through the official IPO documents. So, don't make an investment decision based only on headlines. Why is the NSE IPO attracting so much attention? Because NSE is one of the most important financial market institutions in India. It operates a major platform for equity trading and has a dominant position in the derivatives market. And its business model is particularly interesting. When trading activity increases, transaction volumes can increase, generating more revenue for the exchange. India is also seeing a rapid increase in financial participation. More retail investors, more demat accounts, more systematic investments, and greater participation in equity and derivatives markets. All of this can potentially benefit market infrastructure businesses like NSE. But investors should remember one thing: trading activity can be cyclical. High trading volumes today do not guarantee high trading volumes forever. Now let's come to the most important question. What could happen to NSE shares after listing? There are 3 broad scenarios. Scenario 1. Strong listing. If the IPO is priced attractively, investor demand is strong, and the overall market sentiment is positive, NSE could potentially list at a premium to its IPO price. This would be positive for investors who receive shares at the IPO price. Scenario 2. Flat listing. The second possibility is a relatively flat listing. Why? Because investors may already expect strong growth from NSE. If the IPO valuation fully reflects those expectations, there may not be much room for an immediate jump. The stock could simply begin trading around its issue price. Scenario 3. Weak listing. And the third scenario is a weak listing. If the IPO valuation is too expensive, if market conditions turn negative, or if investors become concerned about future earnings, the stock could even list below the IPO price. Now, let's talk about investors who already own NSE shares in the unlisted market. One of the biggest potential benefits of the IPO is liquidity. Before listing, NSE shares trade in the unlisted market, where price discovery and buying and selling can be more difficult. After listing, NSE shares will trade on a public stock exchange. That means investors can see a transparent market price and potentially buy or sell shares much more easily. But there is an important warning. Listing does not automatically mean profit. Suppose someone purchased NSE shares in the unlisted market at a very high valuation. If the IPO price or post-listing market price is lower than their purchase price, they could face a loss. So don't make the assumption NSE is going public, therefore the price must go up. That is not how the stock market works. Now we come to perhaps the most important factor: valuation. Investors should not simply ask, is NSE a good company? The better question is, Is NSE a good company at this price? When the final IPO price band is announced, investors should look at NSE's implied market capitalization and compare it with its earnings. They should also compare NSE with listed peers such as BSE. Look at metrics such as price-to-earnings ratio, revenue growth, profit growth, market share, return on equity, and the sustainability of future earnings. Remember, a strong business purchased at an excessive valuation can deliver disappointing returns. So when NSE announces its final IPO price, valuation should be one of the first things you analyze. Before investing in the NSE IPO, watch these 5 factors carefully. Number 1. IPO price band. What price is NSE asking investors to pay? Number 2. Valuation. Is NSE reasonably valued compared with its earnings and competitors? Number 3. Earnings growth. Can NSE continue growing its profits over the next 5 to 10 years? Number 4. Regulatory environment. NSE's business is closely connected with financial market regulations. Changes in equity or derivatives regulations could affect trading volumes and profitability. Number 5. Institutional demand. Pay attention to how large institutional investors respond to the IPO. Strong institutional participation can provide an important signal about market demand. But remember, no single factor should determine your investment decision. You need to look at the complete picture. Now let's discuss the risks. NSE may be a powerful financial institution, but it is not risk-free. Trading volumes can decline, market activity can change, regulations can affect derivatives trading, competition can increase, and future earnings may not grow at the same rate investors expect. There is also valuation risk. If investors paid too much for NSE during the IPO, even strong business performance may not translate into strong shareholder returns. Recent regulatory developments have also been important for NSE's IPO journey, including the proposed settlement of outstanding matters with SEBI. So investors should follow the official disclosures carefully. So, what is the final takeaway? The NSE IPO could become one of India's most closely watched IPOs. But investors should not invest simply because NSE is a famous brand. Focus on 5 things: price, valuation, growth, regulation, and future earnings. If NSE comes at a reasonable valuation, it could become an interesting long-term opportunity. But if the valuation is extremely high, waiting for a better entry point may make more sense. So, what do you think? Will NSE give a strong listing gain, or will valuation limit the upside? Let me know in the comments. Buy, wait, or avoid. And if you want simple, practical explanations of India's stock market and personal finance, subscribe to Naveen Finance. I'll see you in the next video. Jai Hind and happy investing. This video is for educational and informational purposes only. It is not investment advice. I am not a SEBI-registered investment advisor. Please conduct your own research or consult a SEBI-registered investment professional before making any investment decision.